Now, SoFi is a digital finance platform where they offer loans, investing, banking, as well as financial management tools. And when we take a look at their performance, just over the last 12 months, they are up more than 100%. And a few of the reasons include the resumption of student loan payments, they have new profitability milestones, as well as some very strong macroeconomic tailwinds. And just off the latest earnings, the CEO himself said that we are heading into 2025 with the most favorable conditions of the last 7 years, with declining rates and a stable economy. So there is lots of growth anticipated by the market for this company over the shorter term as well as the longer term. We're going to cover it in today's episode, run through our own analysis as well as our price prediction. As we mentioned, over the last 12 months, very strong performance. We do notice right now it is trading towards the upper end of the 52-week range. When we last covered this was sitting in the midpoint and has only got stronger and stronger as the months have gone on. In terms of analysts, while Seeking Alpha are the only ones at the moment with a buy rating, we do notice Wall Street has the hold. Yet even though we see the hold rating from Quant as well, 3.49 is very near to the 3.5 that would flip them to a buy, so we do believe they're sitting right now on the fence. The forward PE does look extremely high at 122, but we will cover that in today's episode and give our own thoughts. Now, the first thing we need to do is just look at how strong this company has performed over the shorter term, as well as when we look back to the beginning of 2020. In terms of the new members, this is a company that is increasing them year on year at some very large rates. In fact, what we've noticed just over the more recent quarter, they managed to add 756,000. And whilst we do see these numbers decrease, we are still talking about a significant number, and on a year-on-year perspective, that is 35%. This, although, is something we would expect for a company trading at such a rich valuation. It's not just the members, but also their products we can see are also increasing at some very attractive rates. In fact, the new products just from the latest quarter tipped over 1 million. And when we do look at that, 31% year on year, although if you do exclude digital asset accounts, we are talking about 37%. In terms of the Galileo accounts as well, we can see growth, and we're just trying to highlight that this is still a growth company with some very strong numbers. And we can also notice when we look at the lending products, their financial service products, the growth train continues. In terms of the actual numbers, that is also equally as important, if not more. We notice their year-on-year revenue is up 30%, sitting at 689 million for the quarter, as well as their adjusted EBITDA, 186 million. Margins also looking strong, although we do see a little bit of inconsistency. It is nice to note 27%, one of the best years they have had over the last few years. In terms of looking at it from a trailing 12-month perspective, the revenue inches higher and higher as time goes on, the same with the EBITDA. And as we mentioned at the beginning of the episode, one of the nice points about this company is that they are starting to move into a net income, and that is what we try to highlight on this channel. Companies that have massive growth, times where you want to buy them are when they are starting to move out of the negative into the positive, and that is where we do anticipate this company to be heading. Then we take a look at how strong their performance was from that latest quarter, and it was very good. Not only did they revise their guidance, but we can see their net revenue for the quarter at 689 million was much stronger than even the upper end of the Q3 guidance. That same applies for the adjusted EBITDA, as well as the EBITDA margin and the net income and the earnings per share. So it was a very strong quarter for SoFi Technologies, but the good news doesn't stop there. They've in fact revised their guidance for the full year of 2024. As we can see, their top line revenue, they anticipate between 2.535 and 2.550, much better than the prior 2024 guidance. And as we can see, they continue to move that guidance upwards. And that is one thing we do highlight on this channel. In the market that we're seeing right now with the economy, a lot of companies are trading at some ridiculous valuations, and the market does punish them if they don't, at a bare minimum, reaffirm their guidance or ideally increase it. SoFi Technologies continues to increase it, and that doesn't just stop at their top line. We can also see this on the adjusted EBITDA. We also see this on the net income, 204 to 206. Previous guidance 175 to 185, and the same applies there to the earnings per share. So it is looking very strong for this company, and if we just take a look at their earnings expectations moving forwards, Well, look at that. Out of the next 4 quarters, they anticipate 2 of them to be a double-digit increase to the EPS. That includes the next quarter Q4, but Q1 and Q2, they're expecting triple-digit growth. And what we like to see, management have a very good track record over the last 4 quarters. They have beaten every single one, even though it was marginal. That is a 100% track record based on the historical accuracy. And we can note, given that does give us faith that December 2025, they should be able to hit that 28 cents EPS for the full year, there in turn lowering the forward P to 57.57. Now, don't get me wrong, that is still very, very high in terms of a forward expectation, but if they can continue to increase, that will only come down lower and lower, and we have seen strong momentum from growth right across the board. In terms of looking at some of their financial metrics, the first one is the free cash flow per share. Now, typically, we do want to see this increasing over the longer term, and what we do in fact notice a lot of inconsistency, however, very positive, and this will be the base of what we come to in terms of our valuation later. They are anticipating free cash flow positive over the next 12 months, and based of them recently turning into net profit, we do anticipate this trend to continue. In terms of sales growth, well, double digit every single year over the last 5 years, as well as on a trailing 12 month. We hope this does continue, but maybe one thing to consider when we do factor in a margin of safety later on in the episode is whether or not we do believe this top line is going to start to slow down, and maybe the growth story narrative will start to come to an end over the next few years. In terms of total sales, numerically looking very good, 510 million in 2017, 2.07 billion in 2023. Although we do have to point out, shares outstanding, we normally talk about this in terms of companies returning excess cash to investor pockets through those share buybacks. What we've noticed, they have diluted your position as a shareholder, and something they continue to do even over the last few quarters. Something, again, just to bear in mind. Then we move on to the return on equity, ROE. We want around 10% or more. What we notice, 4% on a trailing 12 month is good, given the fact the last few years have been negative. But remember, these are things that we do need to keep our eye on a quarter-by-quarter basis for SoFi. We then move on to the net debt to EBITDA. Now, this is one that ideally we want to see below 3. EBITDA, remember, the earnings before the interest, tax, depreciation, amortization. And these are the number of years it would take the company to pay off all of their debt net of cash on hand. Signals to us balance sheet strength. Looking good on a trailing 12 month, 1.48, expected to come down over the next 12 months to 1.16. So these are metrics that we do like to see actually declining, one of the few. Then we want to just highlight quickly that we have released our latest free weekly article where we did highlight 2 cheap stocks that have gone under the radar. Now we deliver one of these every single Monday morning to your inbox, so do sign up, click the pinned comment below to get tomorrow morning's copy. We typically highlight severely undervalued stocks that we do believe deserve your attention, as well as what's gone in the market over the last few days. And you will also be able to grab a copy of 28 undervalued stocks for the month of December. Lots of information for each one, the upside that Wall Street themselves see over the next 12 months. And on top of that, you can grab a recently released copy of 29 undervalued stocks that Wall Street themselves believe have the most upside right now in the S&P 500. So click below, you can sign up and start reading straight away. Other things we like to highlight here are insider ownership. Now 2.6%, we do see around 551 million worth of sales by these insiders over the last year. We also see during the same time frame a little bit of buying, around 600,000, and when we do take a look in the more recent quarter, 415 million has been sold. When we take a look at who these insiders are, in fact, we can see the more recent sales have just come from a few days ago. Typically, we don't look at this as a bearish signal. Management insiders sell for many reasons, personal or financial, but you do have the information here. It is transparent, so if you do want to include this in your own investment thesis, you can. Then we get to institutional ownership, around 38%, around 96 million worth of sales over the last year, but we see a significant amount more institutions incredibly bullish on this company, 750 versus 96, and we also notice in the more recent quarter, more than double the amount of buyers, and that is a trend we pretty much see on a quarter-by-quarter basis. You'd have to go to Q2 of 2022 before we see this reverse, but as always, do your own due diligence, never copy what insiders or what institutions do. Now, we just want to flag a few things. First one is their top line revenue and their bottom line net income. Well, we've already talked about their revenue, nice growth over the period, and in fact, when we look at the trailing 12 month at 2.5 billion, this does highlight we do anticipate a very strong year, especially in comparison to 2023. What we really want to flag though is their bottom line and what story is there to be told. And as we've mentioned, pretty much for the majority of the period, they have been making a net loss. What we really want to flag here though is on a trailing 12 month, and as we saw from their guidance, 2024, the first year with some very strong bottom line numbers, and we do hope this will continue. Then very quickly, the balance sheet quick health check, total cash versus total debt. We can see, similar to their top line, cash has been increasing over the period, around 325 million in 2018, 2.4 billion in the latest quarter. And when we do compare that to their total debt numerically and directionally, what we can in fact see, it has been decreasing. We'd love to see that, great sign, going from 6.6 billion in 2018 to 3.3 billion. As we saw on the net debt to EBITDA, essentially it does look good overall, and these are just some things we do want to flag for your attention. We then move on to some gradings. Valuation D, no real surprises. We already mentioned the forward PE does look extremely high, 137 versus the sector median of 13.4, meaning right now if you're buying SoFi Technologies, you are paying a 924% premium to the overall sector. Is it worth it, a premium? Maybe the answer is yes. If you do believe that, then we need to consider how much of a premium is it worth and what MOS do we determine. Again, we're coming on to that shortly. Growth grade, they get an A, so it does make sense that they do get a premium. Given their revenue year-on-year growth at 32% is better than the sector at 4.6. Their revenue forward-looking also much better, 25 versus 5.5, and their EBITDA growth as well, forward-looking 85% versus the sector's 9.2. We then move on to the final grading, the profitability, where they get a D-. Now gross margin 83%, a lot better than the sector at 59.8. Bottom line though, that is where they do lack a little bit here, 8.5 versus 22.06. And another area that we do like to draw your attention to, their cash from operations over the last 12 months is negative 1.2 billion, whereas the sector median is 136 positive million. So quick recap for this part of the analysis, a buy from Seeking Alpha, hold from Wall Street. As we said, quant pretty much on the fence. Valuation D, growth A, profitability D-. Two more things before we do jump into the valuation. Firstly, comparing their performance against others in the industry over the last 12 months. And what we can see so far, whilst very, very strong at 103%, we do have some others that also have some triple digit returns. And when we do look over the last 3 years, we have actually noticed not the greatest, up only 2%. But bear in mind that this will be if you had bought 3 years ago today. Otherwise, if you'd bought just over the last 12 months, then you would have had some very strong performances. The other thing that we do like to do on this channel is highlight performance against the S&P 500. As we are looking to pick individual stocks, we need to have that confidence over the longer term that they will outperform. Now, SoFi, yes, over the last 12 months have massively outperformed, but as I'm sure you will have guessed, over the last 3 years, the S&P has performed a lot better. Remember, these are just considerations, as ultimately you could consider investing in a low-cost ETF that does track the S&P. Now we're going to jump into the valuation today. As always, if you do enjoy the content, value is being provided. Smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now we've used the DCF model today, and when we do run you through it, we have the free cash flow over the last few years. Now average growth a little bit skewed given it has been negative, but moving forwards we have gone for a rate of 12%. Now that is the upper end. Again, we'll come on to these numbers here. So with 12%, using the expectation for the free cash flow in 2024 being positive and the discount rate, we get the present value of future free cash flows and terminal value. We add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see, just over $18, indicating 15% upside. Now these numbers are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it is for SoFi or any others, but we'll just show you for full transparency. At the 10% level, this would indicate $16, 1% upside, pretty much around fair value. At the 8% level, as we can see here, around $14, downside of 12%. Now we are going to use the upper end at 12% today, given the strong growth they have had over the last few years. And what we ultimately do is we take it through to the intrinsic value calculation, where we always apply a margin of safety. Now we use 10%, we execute on that if it meets our 3 golden criteria. That is a wide moat, strong financial metrics, good forward-looking data. If you believe that right now, it is a buy up to around $16.55. Then we keep going till it's near the current trading price. Now what we would say right now, based on the estimations we just ran through on the DCF, SoFi Technology has between 10 to 15% in terms of the margin of safety. Wall Street, well, over the next year, they see this price at $18. They see upside of 13%. But what we would say with these predictions from Wall Street, if the company continues to outperform quarter on quarter, these price targets will only get higher and higher. So do take these numbers with a pinch of salt. But what we ultimately want to run through today is if you do believe that this company will be able to achieve the heights of PayPal, whether that's over the next year, 2 years, or 3 years, given the current market cap of both companies, SoFi would be worth around $90 a share based on PayPal's market cap. What that indicates right now is that the price will be around 463% higher. That is between a 5 to 6x of the current trading price. As always though, do give us your thoughts in the comments below. Maybe you do believe this company will continue to outperform on a quarter by quarter, continuing to increase their forward guidance, which in turn will only make Wall Street's forecast price go higher, our own valuation go higher, given the free cash flows will be significantly better. And as we can see here, is if they do manage to get around the market cap of PayPal, whether that's over the next few years, this company has around a 5 to 6x possibility. As always, if value was provided, you enjoyed the episode, smash that like button, hit that subscribe and bell button so you are notified. Don't forget to sign up to the free weekly newsletter below, grab those spreadsheets, and come and join us in the Patreon where we do talk about our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.